Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 1st, 2025, and we're diving into MetLife's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss MetLife's latest financial performance.
MetLife has just released their Q1 2025 earnings report. Let's get started with an overview of their performance this quarter. Revenue and profitability overview. Let's start with the top line. MetLife reported total revenues of $18.6 billion for the first quarter of 2025, which is a significant increase from last year. John, can you elaborate on this growth?
Absolutely. MetLife's revenue growth of 14% was primarily driven by an increase in premiums, fees, and other revenues, which rose to $13.6 billion. This was supported by strong performance across various segments, despite a 10% decline in net investment income.
And what about profitability?
Net income increased by 10% to $879 million, with adjusted earnings per share rising to $1.96, a 7% increase from the previous year. This growth was largely due to higher life underwriting margins and volume growth, although it was partially offset by unfavorable foreign currency impacts.
Segment performance and strategic initiatives. John, let's delve into the segment performance. How did MetLife's different business segments fare this quarter?
The group benefits segment saw a remarkable 29% increase in adjusted earnings, reaching $367 million, primarily due to favorable life underwriting margins. Retirement and income solutions also showed strong balance growth of 8%, driven by robust sales across its diversified liability platform.
And what about their international operations?
In Asia, sales excluding Japan surged by 41% on a constant currency basis, highlighting strong regional performance. Additionally, MetLife returned $1.8 billion to shareholders through share repurchases and dividends, demonstrating their commitment to shareholder value.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 9.9 for MetLife this quarter. How did the actual results compare?
MetLife reported an adjusted EPS of $1.96, slightly below the forecasted $1.99. Despite this, the EPS still grew by 7% compared to the previous year, which is a positive indicator of the company's ongoing profitability improvements.
What does this mean for investor sentiment?
While the EPS was slightly below expectations, the overall growth and strategic initiatives should maintain investor confidence. The company's strong fundamentals and strategic moves, like the new $3 billion share repurchase authorization, are likely to support future performance.
Operational efficiencies and future outlook. John, let's talk about MetLife's operational efficiencies and future outlook. What are the key highlights?
MetLife's expense ratio improved to 18.9%, reflecting better cost management. The book value per share increased to $35.16, while the adjusted book value per share rose to 55 once, indicating strong equity growth. Additionally, MetLife entered into a significant reinsurance agreement to manage $10 billion of U.S. retail variable annuity and rider reserves, which should enhance their risk management capabilities.
What can investors expect going forward?
Investors can expect continued focus on strategic growth and shareholder returns. The company's strong balance sheet and strategic initiatives, such as the reinsurance agreement and share repurchase program, position it well for future growth.
Key takeaways. In summary, MetLife has delivered a solid performance in the first quarter of 2025, with strong revenue growth and strategic initiatives that bode well for the future. John, thank you for your insights today.
Thank you for having me. It's been a pleasure discussing MetLife's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe to our channel for more financial insights. We'd love to hear your thoughts on MetLife's performance in the comments below. Until next time,